Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at LNTH, or Lantheus Holdings, Inc. LNTH is involved in developing, manufacturing, selling, and distributing diagnostic medical imaging agents and other products for the diagnosis of cardiovascular and other diseases. Here is the barchart.com technical opinion rating for LNTH. The bar chart technical opinion rating is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that LNTH is well above the moving average line, so the monthly trend in LNTH is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since the chart started. So the daily trend is up. Since the monthly and daily trends are both up, LNTH is on our buy list. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. LNTH is below the upper Keltner channel line, so LNTH is inside the buy zone. Since the trend is up, we want to buy a call. LNTH has plenty of option chains to choose from. We're going to use the October 21 option chain. Right now, the October 21 options have 41 days to expiration. Here's most of the LNTH option chain for October 21. LNTH closed at 85.05 on Friday. That means any calls on the list from 85 down to 20 are in the money. Let's take a look at the profit potential for purchasing the LNTH 85 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 85 call is 590 to 630. We tried to enter at the midpoint, so we'll use 610 as the buy price. Our call option calculator shows the profit potential for this call based on LNTH price changes at option expiration from flat to a 12.5% increase in price. We can see that if the LNTH stock price is flat at 85.05 at option expiration, the 85 call will lose 99.2% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid that kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 75 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 75 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the LNTH stock price is up 1%, the 75 call will lose 8% of its value. We want that to be break even or better, so the 75 call does not meet our requirements. Let's see if the 60 call will work. The bid-ask spread for the 60 call is 24.60 to 26.80. We tried to enter at the midpoint, so we use 25.70 as the buy price. The 60 call works. If the LNTH stock price is up 1%, the 60 call will make a 0.8% or $20 profit. That's better than break even, so the 60 call is the one we'll buy. The call option purchase calculator also shows that if the LNTH stock price increases by 2.5%, the 60 call will make a 5.7% or $148 profit. If the LNTH stock price increases by 5%, the 60 call will make a 14% or $360 profit. If the LNTH stock price increases by 7.5%, the 60 call will make a 22.3% or $573 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the LNTH stock price does not make the expected move up and remains flat at expiration, the 60 call would only lose minus 2.5% or minus $65 compared to the 99.2% or $605 loss for the 85 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the LNTH October 21 expiration 70 strike call and sell to open the LNTH October 21 expiration 80 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 70 call for $16.45 and sell the 80 call for 9 even. $16.45 minus 9 equals $7.45. So the entry price or debit cost for the spread is $745. The call option spread analysis calculator shows that the spread will make a 34.2% or $255 profit if the LNTH stock price declines by 5%, remains flat, or increases in price when the options expire. If LNTH is down 7.5% at expiration, the trade will make 16.4% or $122. Creating the debit spread will allow us to collect a $900 cash credit to our brokerage account for the sale of the 80 call. As we said on the previous slide, this reduces the cost of entering the spread to $745. Here's a note regarding earnings reports. The next LNTH earnings report is scheduled for November 3rd. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the LNTH October 21 expiration 60 strike call for $25.70. We also reviewed a spread. The spread said to buy to open the LNTH October 21 70 strike call and sell to open the LNTH October 21 80 strike call at a debit of $745. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.